Hi, I'm Doug McKenzie here at ITC Europe for MAPFRE, and we're going to be discussing Cyberwrite with Hartmut Mai. Hartmut, how are you doing? You good?
I'm doing very well.
Absolutely brilliant. Hartmut, could you tell our viewers who might not have seen you before a bit about yourself and Cyberwrite, please?
Sure. So my name is Hartmut Mai. I work for Cyberwrite since the beginning of the year. Prior to Cyberwrite, I actually worked for 14 years at Allianz, 9 years on the board as a chief underwriting officer and deputy CEO. Prior to that, I had roles at Marsh and also at AIG for a longer stint, 12 years, always in the space of risk analytics and underwriting.
Wow. I mean, that is such an incredible amount of experience to bring to a vertical within the industry that's changing so much recently. And I'd like to understand a bit more about Cyberwrite's unique AI offering, and how does that interact in the industry?
And maybe before I start with that, right, so maybe briefly explain what Cyberwrite actually does, what our offering is. So we are a cyber insurance risk analytics firm. We're a tech company. We're providing actually insights into cyber risks. We produce reports on these, on the companies we scanned, the world's largest reinsurance companies and insurance companies, but also brokers and agents are our clients because they need this insight with regard to their cyber portfolios. So that's what we do as a company.
I mean, it's certainly a vertical that is now fully in swing. And I think a lot of insurers need to take advantage of it now, right? So now we've got the background to Cyberwrite. Can you go into the tech side a bit more? How do you actually conduct that?
We usually actually gather data points about a targeted organization when we actually focus on singular risk underwriting. These data points are then correlated with risk indicators for cyber risk. And that is actually creating a scoring mechanism. The scoring mechanism is based on a benchmark where we benchmark that specific company against its peers in the same industry, same size and same geography. And that actually creates a good understanding of the underlying cyber exposure. This cyber exposure is then summarized in a score and in a report, and that report is then shared with the insurance company and if they decide, with the broker and the client as well. So this report actually has certain answers to some of the specific questions, such as, for example, an economic impact analysis. We actually model what would happen in terms of the economic loss to this company as soon as they get hit by a cyber attack. We provide a regulatory impact analysis, where we actually demonstrate which kind of regulation this company would be breaching as soon as there is an attack. If the client wants, we actually put the client under an alerting system, which basically means that as soon as something happens throughout the life cycle of the policy, they get an alert, as if there are further vulnerabilities, further passwords appearing in the dark web. The client gets an alert, the underwriters get an alert in order to be able to adapt the risk accordingly.
That's absolutely brilliant. I mean, when we think of AI, at least when the automation side of things, you need that adaptability, that scalability. But I want to see how it improves, ultimately, in these times, the bottom line.
There's a lot in for the insurance organizations we work with. In fact, one of them actually had a record low loss ratio in the US of 24.6% 2 years ago. And so there's a lot in for them. So what is that? So it's not just the scoring mechanism, which actually helps the underwriters to understand which risks to invite into their portfolio and where to commit the capacity on. But it's also to adapt within the underwriting process the economic impact analysis. So the underwriter gets the opportunity to design and structure the policy to the respective needs of the clients, but also with an eye on the profitability on the underlying portfolio. Same with the loss mitigation recommendations we provide in our report. We provide that on a prioritized basis, so the client get actually to see where exactly their vulnerabilities are in terms of their systems.
Yeah.
And they can actually then act accordingly to actually work on these vulnerabilities. The underwriters at the same time can actually see whether the client would implement these recommendations and whether they work through their priorities throughout the life cycle of the policy. So I think there's a lot in for the client.
Yeah.
There's a lot in for the insurance carrier as well, because this is constantly monitored.
Yeah, it's a brilliant knock-on effect, isn't it? How it actually improves everyone's experience within the whole policy. With this in mind then, why do you think small to medium-sized businesses have typically been left behind when it comes to new products in insurance, for instance? There's a lot of small, medium-sized tech companies, and they certainly need to underwrite their, against cybersecurity risks. So why have they been so left behind?
I think that usually this is how markets are created. Now,
right, yeah.
Cyber is not really an entirely new product out there.
No.
So I think the first standalone policies appeared in 2010-ish.
Okay, yes.
But the product was actually insured way before as on an endorsement basis in other type of products such as engineering, property, liability, and so forth. So the main focus on this product line actually was created in 2010, but the market never really took off. It only happened as soon as the large corporates had some cyber attacks which actually hit the headline news.
Yeah.
SMEs would not necessarily hit the headline news. This is where it started, and this is where a large corporate and the risk manager of large corporate understood that there is a risk, an evolving risk coming up they need to actually have a special focus on. So they created their entire holistic risk management programs around this new type of exposure.
And it trickles down.
They got the money for it, they got the budgets for it, and the budgets, right?
Yes.
They actually have to create and they have to grow throughout many years.
Well, especially when it comes to cybersecurity that is ever changing.
So this is actually what happened, and it started with the large corporates. Now, the opportunity which large corporates have in terms of risk management approaches and really, educated decisions on a new type of exposures, they didn't really exist in the SME space. So the budgets were not necessarily there. And this is where Cyberwrite is focusing on. So we provide through our reports, which is a very efficient way, this insight for small and medium enterprises in order to make them more resilient in terms of these type of exposures. So I would actually estimate that this market is picking up, and we see this already now, is picking up rapidly. We're facing roughly 100 million companies out there which are in desperate needs of cyber insurance, but they don't really have necessarily that insight yet. And this insight is what we provide. From these 100 million companies, we actually have a target ratio where we can actually provide these kind of reports of 99.97%. So as soon as the company actually has a website and has a footprint on the web, we'll find them and we can actually provide these type of reports for them.
That's incredible.
It's a multilingual platform. We actually work in 8 languages and we have clients around the world. So it's
well, with that in mind, let's talk about one of the reasons we're here for MAPFRE. And can you tell us a bit more about the partnership with Cyberwrite and MAPFRE, please?
So we're very proud that with MAPFRE, we have another blue chip organization on our client portfolio. There are quite a few already out there. It's great to actually have MAPFRE as our partner for the future here as well. I think throughout the entire tender process, we've seen that MAPFRE has a very diligent view on these AI and machine learning driven organizations to help them to augment their already very robust underwriting approach. This is something we really like. We also like their approach in terms of the singular risk view, but also on their portfolio view, because the insights we give to insurance companies help them to actively steer their portfolio in terms of aggregated exposures, in terms of finding loopholes in these portfolios, structuring the portfolios exactly to their profitability expectations.
Yeah, I mean, there's so much to cover. And as we kind of alluded to earlier in the conversation as well, cybersecurity, for instance, is always changing. Now, obviously, we can insure against the worst outcomes. We can protect ourselves. But from a kind of tech standpoint, how can you at Cyberwrite keep up with all the ever-changing kind of new cyber attacks
The good news is that the platform is very adaptable.
Right.
Very adaptable to the needs of our clients.
Yeah.
For example, if MAPFRE, our expectation into MAPFRE would be that they share their insights and their feedback with us, because we really see this feedback as a gift, and it helps us to really adapt the platform and make it even more robust. So the platform is very adaptable to the needs of our clients, but also in terms of what is happening out there in terms of new exposures and new risks. So that means we don't really treat that platform as a one-off, i.e. there's a piece of technology, we put it onto your desk, and it's not going to change anymore. All of the analysts we employ around the world, they actually constantly adapt this platform to new and upcoming risks, and adapt the AI and the machine learning components accordingly, in order to make it always suitable for the risk as we see them today.
Absolutely brilliant. Now, Hartmut, we've kind of deep dived into cybersecurity here, okay, and the risk analysis around that. Where is the future of the insurance industry? Is it going to be as granular and as ever-changing as Cyberwrite can provide?
I mean, we're here at the DIA, right? And the DIA is all about the future of insurance, right? So I heard it many times on the panel discussions. Nobody can actually predict the future.
If we could, we'd all be millionaires.
From a macro level, from a 30,000 feet level, I would actually think that technology is here to stay. And technology is here not only to stay, but to transform the business. So, and there's a lot in for insurance companies, for salespeople, but also for the clients. And let me elaborate on that a little bit. So what we do in terms of investments, in terms of risk and data analytics, and Cyberwrite is actually one component of that, is that underwriters within large organizations are moving away from an underwriting bias view towards more of an objective data-driven view. And that is a huge difference. So it gives them more insights into the details of the risk, and it gives them the ability in the future to predict certain outcomes on a type of exposures. Now, that obviously has a big impact on the structuring of their portfolios in terms of profitability and profitable growth. But it also gives them an opportunity to look into risks which are seen as not insurable today. So these type of risks, I would not wonder if underwriters would actually have a different view on these in the future. So i.e. there's more insights into it, because the data density and the efficacy of the analytics is much more robust. Now, what's in it for the client? From a client perspective, I think the client would actually have more ability to actually seed risks and transfer risk into the insurance market, i.e. the insurance market would become more relevant to them than they are today. In an average, only 6 to 7% of the client's exposures today is transferable. This number has to move up in order for the insurance industry to stay relevant for the clients. And I think most people in the insurance industry do understand that. So there's a reciprocity here. So the investments obviously have to make sense from an insurance perspective, insurer's perspective in terms of payback, but also from the insurance perspective, they should actually have that payback as well, in terms of the risk they can actually transfer into the insurance industry.
Hartmut, thank you so much for your insights. With someone with such a brilliant background in insurance, hearing your thoughts has just been an absolute pleasure. So thank you so much for your time.
Thank you so much.
It's been a pleasure. Thank you.
Good to see you.